History is repeating the exact same playbook that we saw at the depths of the lows of 2008 and 2009's global financial crisis. Let's look at the similarities on the charts and what's going on out there in the market sentiment and use headlines to see if we can make heads or tails of this bull or bear transitional period in the markets. Now, I've also got the NASDAQ to get through, looking at some overhead resistance. We're not all bullish only here. The US dollar, and of course, BTC, which I've sold my plants for to buy some more Bitcoin today. Only joking, they're outside in the rain to look nice and fresh for the next video. Guys, today is the day that our free crypto and economic report goes out. So link at the top of the video description, check that out. You can also check out some of the trading results there from our members who are crushing it short and long in the market. All right, that's enough of the shills at the video description there. You can get a link to at the top. Let's dive into where the market sentiment is, what's going on that is exactly like 2008, 2009, that old history repeating and rhyming, and of course, look at the charts to see where it is objectively in the market. Crypto fear and greed, 57. We're at greed in crypto. Greed yesterday, greed last week, neutral last month. These levels are levels that we haven't seen for over a year. If we go back on the fear and greed index here for crypto, the highest we saw was around 55, so basically neutral back in March of 2022 as the market was climbing up into that lower top before it collapsed. That was the time that the Bitcoin conference was on, and you had the likes of Peter Thiel telling you how beautiful and fantastic crypto and Bitcoin were. Meanwhile, he was selling billions of dollars of his portfolios. That is all documented out in the news. Whereas now we find ourselves a year later, much lower than those times. However, the greed is much higher. So that's giving us a bit of a divergence between what the market is actually doing, the market feeling, and then I guess what the headlines are trying to tell us. So these are good signs for the bottoming process. You can see pretty evidently, do I need to draw a red line here just to show you? Higher lows forming in and on the market sentiment. Let's take this out to the max, and we can see that in the past, these are the sort of levels, if we go just that touch higher at around the 70s and 80s, they're the sort of levels that we start to see some resistance when it comes to the market sentiment. So we have to pay particular attention to where the price is at for Bitcoin when the market sentiment reaches those levels. We don't know exactly what the price will be, but we know when people get too overheated in their beliefs in greed, that will have a whipsaw back to the downside here, and that will start to cool things off. That is going to be an interesting point to note where the Bitcoin price is, because if we get a higher low on price and we get that nice whipsaw back in terms of the fear and greed, so maybe we drop all the way back to the 20s or 30s and we get a lot of fear, yet the price is higher, good things are ahead because it's a divergence when it comes to the price and the feelings, just like how we saw through these lows here with the market feeling a little more confident in themselves. So this will be the point to pay particular attention to. If we start to get a top out here and where we fall from that point, let's have a look at where the price is from there. In terms of the stock market, they're still quite fearful over there in stocks compared to the crypto and Bitcoin space. Previous close, we were at fear. 1 week ago was also fear. 1 month ago was greed. That was mostly around the February dates where we had a little bit of a higher price there for February, or some tops coming in. And a year ago, it was around that neutral point where the market was just starting to climb down. But if we take a look at the timeline, this essentially lines up with a lot of the tops and the bottoms in the market. Same sort of thing for crypto. We get greedy when the tops come in, we get fearful when the lows come in. The most recent low was obviously the banking collapses in middle of March. There's March 9th, and obviously the reading for the next day, because we had to get through the 9th in order to get the reading for the 10th. You can see it was at 24, and then it started to drop off a little bit from that point as well. And now the market is finding a little more strength in it compared to what it was 2 weeks ago. So in terms of the fear and greed index for the stock market, it looks like it's putting in bottoms, and we're starting to climb out of the depths of the lows that happened through June, July, and October of last year. We're starting to put in a high low here for March, and the prices are slowly climbing out. These are the same sorts of patterns that we see time and time again, especially during significant lows like we saw in 2008, 2009. That was the end of the GFC, at least for the stock market, where it rebounded very strongly from that point. Now, I'm not saying that we'll rebound just as strong as we did back then, but it seems like we are putting in a low just based on the market sentiment and what's going on in price. Now, like I said, I don't want to get too bullish because I know that triggers some of the bears, and some people think it's maybe too biased towards the bulls. So I do want to go through some of the bearish stuff at the end of the video as well. This is very similar, almost exactly the same to what we have just seen in the markets in 2023 as to what happened in 2009. This is the sort of thing that I talk about all the time if you want to go back and do the research. Otherwise, you stick around on the channel, like and subscribe, all that sort of jazz, and you watch me do the research here. Matt, I won't attempt the surname. 2 headlines leading up to the March 2009 low in stocks, days before the start of a multi-year bull market. All right, to go and do this research isn't too difficult, but it does take a bit of time. Money, fund, assets jump. Exactly what we looked at in yesterday's video here, which is why I have this screenshot up here. Money, market, fund, assets, they jump. Just like we saw in 2009, the peaks, 2020, the peaks. Basically, retail, everyone pulling money out of the markets, holding it in cash because they are scared. Yes, we saw the banks collapse, or at least a few of them compared to the hundreds that did not collapse. And they pull the money out at the wrong times. This happens time and time again. That's why most people lose in the markets. 2009, if you don't remember, the exact low was March 2009 for the stock markets. Investors panicked, flocked to cash. Here is the headline: money fund assets jump, asset and money market funds jump. 18 billion in the last week as both retail and institutional funds had a healthy jump in assets, according to the Investment Company Institute. For the week ending Wednesday, total assets rose to 3.9 trillion. Now, of course, these are different times. 14 years ago, that was pretty high figures in the market. Like you can see through here, this was around that 5 trillion, 4.5, and I believe that was around that 4 or 3.9, like it's saying here in the news article. Now, the next headline in March, this article was published making the claim that all SP 500 bank stocks could go to zero. Exactly the same as what happened last week by some of the biggest names in this space. The guy's talking about banks could go to zero. Be careful, get all your money out. Where are you going to put it? What could happen? Are we going to keep it in our mattresses? This wouldn't be the only time either. This has happened throughout history. And like I talk often about the book, The Secret Life of Real Estate and Banking, if you want to read that history, some find it quite boring. It goes back to the 1800s of how this thing has happened every single bloody time. Go and read that book. It's fantastic for the history. The S&P 500 could fall to 460. It bottomed at 666. Eerie, of course, but that was the bottom figure for the S&P. They were saying it could fall even further. So the headline, March 8th, 2009, keeping your money out of the black hole. What if all financials finally totally implode? Seek out growth funds. So exactly the same thing happened at the low, which is what we are seeing now. You guys have seen the headlines. I hope at least you're following something there to see these headlines, but not fall into the trap of the emotions. Maybe this time is different. I'll give you that. But after reading 220 years of history, which is that book right there on my shelf, it's basically the same playbook time and time again. But most people forget because it's almost a generation between these events happening and coming to the forefront of the media, the forefront of the headlines. And so as those generations evolve, the next generation in their 40s and 50s, they forget about it, or they're not in the markets anymore because they've lost everything. They couldn't be stuffed. They go on just to live their life in their job. The next generation comes through, the 20s and 30s, they live through something. They think it's the end of the world because they haven't studied anything in the past. That's typically what happens. I'm just the messenger here. All right, so looking at those headlines, something we can see in recent times, apart from the banking collapses, we covered this on the channel here. We looked at the highs for gas. This was the headlines at the time. Gas is too high. People in Europe will freeze. When it comes winter, you just wait. That was all the stuff we heard. Because remember, this is June of 2022. We have July, we have August. This is all the summertime. Wait until the winter comes. Everyone's going to freeze, which then means, I don't know how they connect these dots, People can't afford their bills, so therefore they can't afford their homes, and then they say the housing market will collapse. Very different story now, 9 months later. We're seeing rental prices rise in many areas around the world. It's not everywhere, but we do see it in many places around the world. The gas prices have fallen 80% since that time. We were pointing out if the market gets rejected here at about that 8 level, then it's going to be probably a down market because you get a lower top. This is on a monthly chart. The breakdown here of the market breaking the next low pretty quickly, and then the show's over here as it broke the next swing low. This is our Gann swing indicator tool. Again, there's a link to this in the video description if you wanted a quick shill on that. This is what I use for all of my trading. 80% down, show is over. This is how we read the headlines using the charts, the objective stuff right here. Now, here's the next unpopular opinion. March 2023, today's banking crisis will not have the same impact on the S&P and NASDAQ as the banking collapse in 2008. Even though we're seeing the exact same things in the headlines, I don't believe we'll see the same things in the charts. And I've pretty much put that through on many of the videos over the last several months on the channel. Of course, that's my opinion based on my analysis. I hope you go away and take the data for what it is and do your own thing with it. Now, the other thing to note, basically what I've learned through history, is if a market is resistant to bad news, meaning the price is maintaining, like we see with the S&P in just a moment, 3,500 is the bottom there. Bitcoin's put its low in at 15,500. If a market is resistant to bad news, that usually means one thing, and it usually means we're turning the corner and we're potentially starting a bull market. Remember, through the bull market of 2021, if you were around, the bad news kept getting shrugged off. The good news kept pushing the market up. Then in a bear market, the bad news pushes the market down, and the good news just can't hold the market up or get any sort of rallies. This is what happens in a transition. This is the flip from the bullish sentiment to the bearish sentiment. If you forgot about all of the major headlines last year, regulations are coming to crypto. Interest rates are going through the roof. There's going to be a World War III. We heard about all of that in the first and second quarter of 2022. Russia, but stablecoins collapsing in the third quarter of 2022. Exchanges going down in the fourth quarter of 2022. But China, that never ends. There's always something about China. Banking crisis, first quarter of 2023. But recession, we've heard that now for 5 quarters. But QT, so quantitative tightening, that was all of last year. But worst, name it, yada yada, in history. Meanwhile, Bitcoin's found that bottom and is up. This is just a look at the major headlines. I missed a couple when we were looking at tech layoffs as well. And now we can see that the NASDAQ in a moment is well and truly up from those lows. So if you're not following me on Twitter, go and do that. There's another shill as well. Of course, this is my channel, so I'm going to shill my own stuff. Now, looking at the McLennan Volume Summation Index. This is fascinating stuff. Don't go anywhere. Like and subscribe. This is what this chart is about right here. Now, I've done the work. I suggest go on doing it for yourself because it's a really fascinating exercise to do. Each of these bottoms and tops will very close to them, if not being exactly on them. It correlates to the tops and bottoms in the market themselves. So once we get some of these readings at some of the lowest points, that's typically the lowest points for the SP 500. So let's have a look at a few of these, and we can go through and look at the dates here. We've got May 12th and June 7th. So we go back, let's have a look at May 12th. There's 13 and there is 12, almost at the exact bottom of this little move here. How do you know it's the exact bottom and it doesn't go any further? That's to be decided at the time, of course, but that's when we use our TA on the chart as well, just to give us a bit of an idea. We're not trying to call the exact low, but it gives you a rough idea when you have a bit of a glance that it calls the pretty strong lows of that period. Sure, this low went lower here in June, but you can see it holding up at about 3,700 points from one low, quick bounce under it, a second low, third low, fourth low, and then the market took off to that August top. Now, of course, we're trading up at 39.70 at the moment, which is basically above all of these previous lows, so that's a good sign. We can take another couple here. We got August 18. I believe the top was around August 17, and then it started to fall off. We also had September top around here at 12th and 13th of September. There is your September top at the 12th. Here is your top in August on the 18th. So basically right around that top. Here is the cycle low so far, the 13th of October. Surprise, surprise, there is your bottom there, the 13th. That's a negative reading as well, so pretty significant. Now, I'm going to fast forward to exactly where we are today. We're at a negative reading again. So from that October low, pretty decent run up, and then we got back above the level reading of around 1,500. There was another low here in December, so maybe I'll take a reading somewhere around 1,000 to about 1,200, and maybe that's where we could start to see another top out for this move to the upside. Here is your December low around 3,800 points. There are your December peaks at around 4,100 points, and then we had that February top at the 2nd and the 6th. Here is the February top, the 2nd and the 6th, right at that reading there at 1,700 at the peak. We're now in extreme fear. That would lead me to believe that we'll either, for the worst case, hold out at these levels until the reading catches up, or we start to move up higher from this point forward. Now for the NASDAQ, we're at new 7-month highs. Pointing this out on a recent video, what does that look like? We have closed the week higher than anything we've seen since August of 2022. At the moment, we still have another 3 days to go for the NASDAQ's close, but we're at least setting up above these previous resistance levels. We've got to wait till the week closes. Maybe we close under it. Ideally, we want to see it close above that level of around 12,750 or so points. Now, this was the area that I was going to say the resistance and the potential to the downside. Maybe we don't spring up as fast as what some are anticipating. We do have a lot of overhead resistance here at the 50% level. We have some extensions that run up to this exact level here at between 13,600 and 14,000 points. We have previous tops. We have previous bottoms, so a support and resistance flip. So there is a lot of headway to get through. Two things. If the market slices through all of this resistance, which we can already preempt, that is going to be extremely bullish. Slice through and close above. Extremely bullish. I would not be getting on the bandwagon of this market is now going to reverse and go back to new all-time lows. If we get rejected, then we look for the higher low support. That higher low support for now is going to come out somewhere around 12,600, 800 points to the low side, maybe even as far as 12,000, which are these previous tops through November, December, and the market's also found a 50% level so far. Maybe that's where we come back to. But if it slices through and closes above, that's another nail in the already buried coffin of the bears. The bears may come back to life should it get rejected and close underneath some of these previous levels of February. So I've got to go up and get rejected, come back and close underneath these lows, and then come back and close under these lows here. It's the only time the bears can come back to life at this stage because it has to get back below previous support levels where the market has bounced from through bad news. So it has to be something even more severe than the banking collapse. Probably nukes from Russia could be one of the only things that get us there. We'll have to wait and see. In terms of the US dollar, it looks like we're also heading down again. This was marrying the news up with the charts, which is basically what I do here on the channel a lot, looking at the headlines and how the market sentiment is reacting compared to what other people are believing is going on and using the charts to give us that data. Peak of the market, September. We looked at this time and time and time again. You can go back 6 months on the channel and see those videos. US dollar is strong. Euro's collapsing. Great British pound is collapsing. Buy US dollar now. This is going to the moon, etc., etc. Market showed some weakness, lower tops. We were calling that on the channel based on the swing indicator here. Markets collapsed from that point. Many are still believing we're going to go up for another move to new highs on the US dollar. I don't think that's the case. It looks like we're failing at lower levels than I had expected. I was hoping for a 108 test, but for now, we are struggling to get back above 103, 104. So we have to wait and see whether this 100.8 holds up. Otherwise, looks like the show is heading south again for the US dollar, which of course means it's going to be easier days for Bitcoin to keep rising. And talking of rising, we have 3 days to go for the monthly close on BTC, which could be 10 months out, the highest close in 10 months for Bitcoin. The last time we saw a close this high was May of 2022 at a price of 31,775. Hold your horses. I am not saying that Bitcoin will close at 31,775. I'm saying the previous highest close was that of May 2022. So now could be the highest close since that point. Whether it closes here at 27,000 or closes down at 25,000, it's still going to be the highest close in 10 months. The only way it's not going to happen is if we get absolutely smashed, rejected, and close below last month's close of 23,100. So far, it looks like things are looking pretty positive for Bitcoin at this stage. And the end of March is also the end of the quarter. 64.61% so far. Pretty decent run up in 2023, considering all of last year was red quarters. Red, 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 red. So it's good to see that we got at least one green. I guess you'd have to say that the maths is on your side here. The probabilities are you've got to eventually see one green month. It's not going to be red forever unless you think Bitcoin is going to zero. Now, going back to the previous cycles, the ones I want to focus on, 2019, 2015, because these were those years that the market was reaccumulating and starting to work its way higher into a new bull market. 2015 had a red, green, red, green. So it was basically tracking along sideways until it got out in 2016 and started to work its way higher. Much bigger closes in the green than there were in the red. So even though there were red quarters, they weren't that big of a deal. 2015, that first quarter sucked, and not too much happened in the second quarter. Third quarter, not so bad, and then fourth quarter started to take off. In 2019, we had a massive gain in the second quarter. I'm not thinking that we'll see that exact same thing repeat. We have had a pretty good gain in the first quarter. So maybe we see a slight increase in the second quarter and we flip these quarters here. What happened in 2019? The second quarter was greater than the first. Maybe we've gone through that accumulation already and we had the big move in quarter one and maybe a smaller move in quarter two or something flat. We'll wait and see on that, but at least we got that big move out in quarter one. So hopefully I've shown you how history repeats time and time again. Let me know in the comment section down below. Do you think this time will be different? Do you think the banking collapses that we're seeing happen right now will send the S&P and NASDAQ to new cycle lows below 3,500 points on the S&P? You know what my view is based on the data that I've seen here and the historic evidence of the news headlines at these lows, not over the last 14 years, but over the last 220 years. It's the same thing. Hopefully I haven't swayed anyone too far to my side. I'd love to hear from you guys in the comments. Like and subscribe. And like I mentioned before, you've got that link in the top of the video description to check out our free crypto and economic report coming out today. Thanks again, guys. I'll see you at the next one. Till then, peace out.